Welcome back, everyone. We have an update from OptimumBank Holdings, Inc. Trades on the NASDAQ under the symbol OPHC, and it operates as the bank holding company for OptimumBank that provides a range of consumer and commercial banking services to individuals and businesses. Happy to welcome back the chairman of the board, Moishe Gubin. Nice to see you again, Moishe.
Yeah, nice to see you too. Thank you for having me. We'll start by going through the slides real quick for those that are new to our company, the folks that have been that know our company and have been on here for the last couple of times that I've been presenting. Feel free to take a power nap for about the next 2 minutes or so. Our bank has been, we're close to being 24 years old. Like Anna said, we're listed on the NASDAQ under the stock symbol OPHC. We're a bank that's in South Florida, located in Fort Lauderdale. I'm the chairman, the president, as the slides say, Tim Terry, and CFO of Elia Nunez. We have a strong board. We've been together for many years now. Even management itself has been with us over 10 years, and the CFO has been with us for a few years now, maybe 4 years or so. Like I said, we're going to be celebrating 24 years, November 1st, 2024. And then the following year, obviously, the 25-year anniversary is going to be a big one. Our company was started basically as an internet bank, and I got involved about 14 years ago, and right after the Great Recession, and we started cleaning up the bank and turning it around and doing what we can, and now today we're proud to say we're close to being $1 billion bank. Our returns are really great, as we're going to get to here on the slides. We ended the first quarter with $941 million in assets. We have 3 locations. We're mainly located, our main branch is in Fort Lauderdale. We have a branch in Deerfield Beach, which is where I sit. Feel free to come visit me in Hillsborough. And we're opening up a brand new branch in North Miami Beach that should hopefully be open in the next couple of weeks. Like I said, we're on the NASDAQ. Our stock price to tangible book is less than half, which makes it a good value for the folks out there to buy our stock. Our annualized return on average equity based on first quarter annualized is over 13%. If you add back, we're because our growth is as big as it's been, our ROE is actually understated in some regard because we have provisioning that all the other banks that are not growing don't have. So if you add back the pre-provision, you add back the provision, you add back the taxes, we're almost a 24% return on average equity with a NIM of 375. We're beating a lot of our peers. We feel that we're in the right place. Florida is a really great state to bank in. The economy itself is great. The weather, of course, is great. It's been growing real nice, 1.61% annually, which is 2.5 times the national average. Population over 65, which is a good segment for us. We do a lot of HOAs, a lot of senior. We lend money in the senior space as well. The unemployment rate is below average, which is great, at 3%. The GDP is strong. It's a great place to do business. This is our last 6 years or so. If you look at our growth, employees from 27 to 66, our non-interest expense has grown as well. As we've grown the bank, we've had to increase costs. Total assets, as you see in 2020, where we started with 235 million, and March 31st we ended at $940 million. Our NIM, this doesn't show you across the peers. I think we have another slide that does, but we're beating most of our peers, and very proud of it. We got a really great bank here running. Look at our growth rates. Now, we don't think this is necessarily going to continue at such a high growth rate. But that being said, we've built a nice brand, a nice franchise where people, love us and they bank by us, and they bring everything to us, which we pushed and pushed and pushed, and we continue to do. And so, most of the stuff in our pipeline that comes is coming from a repeat a customer or someone who got referred by a customer, and mainly a lot of vanilla deals. We've held firm on our pricing for the lending, which has given us the NIM that we have, and we really don't get affected so much by rates going up or down at this point, because our pricing is our pricing, and our following is our following. So we take good care of them. But looking at the last 5 years, 63% growth rate on loans, a 55% growth rate on deposits, non-interest income is over 136%. But really, I would redo the math and give you a different number to actually look at 2021, because before they practically had nothing. Our cost of interest-bearing deposits today is about 3.09. Our yield on loans averages out at 6.7. Every day I pray for people to pay off their loans because most of those loans are at a low interest rate, and we'd like to relend that money at current market rates. Our deposits basically sit where we're at 25 to 30% in non-interest-bearing deposits. Everything else is interest-bearing, depending on what the client is looking for. Today, our deposits are close to $800 million. Really, the keys to our success have been where it's all relationship-based. We know most of our customers, and we don't have any random. Everybody that comes in becomes part of the family. We get to know them. We take good care of them. We're a big lender. We're a big bank for the merchant cash advance industry. Recently, we went on an event. We talked about it at the last presentation here, where we went to a conference, and we support that industry, and we support those folks with all their needs as far as banking goes, and we should continue to do that. Here's our credit trends. We're sitting with our reserves, and we haven't had a bad loan in many years. So you look at our non-performing assets. We have one loan that sits on the list as non-performing, though we're getting paid off, and we're in the money on that deal for, I think, $750,000, which basically puts us at this 0.08%. Our loans, we're a South Florida bank, so most of our lending is going to be commercial real estate. We have a strong following. A lot of the folks that we're servicing and taking care of are in the real estate business, which is CRE. People ask us all kinds of questions about what's in that portfolio, and typically the things that people are concerned about, I'll just talk about real quick, which is office. Our office portfolio are really owner-occupied offices by professionals. We don't really have any big buildings down in Miami or New York City or any of these places. The other thing people are concerned about is hospitality and the hotels that we have. The stuff that we have are all flagged hotels, and the stuff that's not flagged hotels are boutique hotels that are sitting on the beach, Miami, Hollywood, and the like. And we don't have any issues. We're stressing our portfolio on loans that mature or reprice in the next 18 months. And I'm proud to say, of course, that out of our whole portfolio, which by the way is I think we're at a 52% LTV across the board in our whole lending, in our whole loan portfolio. Yes.
Great. Address, but I want to make sure that our audience gets some. Tom, wants to offer investment products other than CDs?
Do we have any other investment products?
Yes, other than CDs.
No, we're a community bank that acts like a commercial bank, but most of our products that we're offering, CDs, money markets, typical bank accounts that a community bank would have.
And Seth asks, are you seeing any changes in your cost of capital? And if so, how does that affect your NIM?
No, so like I touched on a little earlier, I mean, we're going about it the opposite of a lot of other people. We're pricing our loans off of the evolving pricing. So we're SOFR plus 350 to SOFR plus 400 as our pricing. That might not work with some people, but that keeps us a steady cushion that even if we were, which we don't want to, but if we were to take expensive money, which today is like 5.25, which still gives us a NIM 375 to 4 times. So that pressure doesn't affect us because we have such a strong relationship with our borrowing base. The lending is at a pricing that takes into consideration the potentially expensive money.
Okay. And Doug Jenkins wants to know if you're looking to open more locations in the region.
Not really. I mean, our customer base is along 95, and particularly, the deposits, we could take money from all over the country, let alone all over the world. It's a risk based on BSA and AML, but as far as bringing in the cash, the actual branch network, we're never going to compete with a branch network like Chase or Bank of America. So from that point of view, it becomes worthless to us. But if we could bring in deposits without having the branches, what we would do is open up loan offices, going further south, because we're not in Miami, even though our new branch is North Miami, which is the top of the Miami-Dade County. So we would maybe open up loan production offices, but not actual branches.
Okay. And last question for you. Stella asks, when you talk about successful growth, where would you say your growth is strongest?
Really, the network that we have with between high net worth individuals and the Jewish communities and the local communities where our branches are. I mean, we're super strong on how we lend and how we support our customer for all of their banking needs, and we're going to continue to do that.
Wonderful. Well, thank you so much for this update. We look forward to following you along in the near future with more.
All right. Thanks, Anna.
All right. Thanks so much. We'll see you soon, and we'll be back with Findex Technology.